Hello and welcome to Investing Confidential. Well, it's interesting. Everyone now is jumping on this China is melting down club. I mean, here we have the Wall Street Journal saying the China boom ends. Interesting. We've got all these Wall Street pundits finally cutting, as you can see, their GDP, the China GDP growth. I mean, these guys are a joke. I mean, they basically lied for China for years, pumping up there, saying China's growing this, China's doing this, China's doing that. And now that China's on its ass, they just decided at the bottom to sort of say, okay, we're cutting their growth. China's going down the tubes. Look, China itself is cutting its own throat. Like they're trying to cut rates. They're trying to stimulate. Like last night, they're cutting rates dramatically on loans. The stimulus is not going to work. Okay. And for all you new listeners out there, this is what I said 6 months ago.
You know, I think my personal opinion, I spoke about this in a prior video. China's done as an economic power. Okay, they're no longer going to surpass everyone says, oh, they're going to surpass the US. This reminds me of Japan in the 1980s when everyone said, oh, Japan's going to take over the world. No, Japan didn't take over the world. Their market crashed. Everything, real estate crashed, and Japan is still trying to recover from the late 1980s. Still trying to recover today.
Well, as you heard, I mean, I predicted this. I knew this was going to happen. The same idiots who are cutting China's growth rate were talking about 6 months ago, saying China's going to take over the U.S. Right? This is what these people were saying. Right? China threat, China threat, China threat. No. China was never a threat. This is an artificial economy, okay, a command economy, and therefore that's why it was able to hold on for so long. Not for nothing though. I've been making videos about China for some time. The last 6 months, I've done probably 4 or 5 videos on China. So anyone who's been watching, and there's not many of you, but those who are watching this, what's happening now is not a surprise. Okay. The real estate sector has been in trouble, which is the engine of growth, by the way, for China, even before COVID. Okay. This is not something new. Okay. Now you got other developers that are finally admitting to their problems, like Country Garden. They're going under. Look at Country Gardens. They have U.S. dollar debt. I mean, there's idiots, and probably you own some of. If you own a mutual fund, a high yield mutual fund, I guarantee you have Country Garden debt in there because people like Fidelity and BlackRock don't care. Right? They care about ESG, but they don't care about investing your money in crappy Chinese real estate companies. So look at the debt price. It's at default levels. Okay, Chinese property stocks, they're falling across the board. It's not just these 2 big ones. Okay, mortgage activity, look at this. The worst in history. Loan growth, okay, loan growth is plummeting. What does that tell you? That tell you that the average guy on the street, okay, the engine of growth, the consumer, the 1.3 billion people have had enough. Normally, when China would stimulate, they would come back and they'd have confidence. They have no loan. There is no confidence in the government. Absolutely zero. Okay, and no matter what they try in terms of stimulus, it's not going to work. Okay, China, as you can see here, they rely on real estate. I've been talking about this ad nauseum for many different videos, but this is graphic. Okay, they rely on the real estate industry more than any other country in the world. And in fact, that 21% number, it's a fallacy. The importance is even larger because it feeds into so many other things. I would say 50 to 60% of China's GDP over the last 30 years has been because of real estate. I mean, there's no other country in the world that has that reliance on one sector. And so when Chairman Xi, or whatever you want to call him, Xiao Jinping, decided to destroy the real estate sector, and by the way, he tried to destroy it for good or for bad. All right, the real estate sector was a leverage mess, but it was the engine of growth. Bottom line is, he destroyed it. He destroyed it, and there's no amount of stimulus is going to help that sector. Okay, it helped in the past; it's not going to help in the future. And by the way, Chinese individuals love property. They love to own real estate, but they have no faith anymore in the CCP, the Chinese Communist Party. And they're not investing in real estate. And as you can see here, they are hoarding cash. Now, it's dangerous to hoard cash because the government it's a command economy, and the cash is not doing much. But this is what's happening. And then unfortunately, when you hold cash, they're pumping money into wealth management products. Okay, what are wealth management products? Well, some bank says, hey, I'll pay you 7% when the bank rates are 4%. Now, the wealth management are owned by the bank, so it's kind of a scam. So the banks essentially start a wealth management on the side. They pay you low rates to get your money into the wealth management products. And these folks, these are Ponzi schemes. I mean, they're not Ponzi schemes in the sense that they're set up as fraud, but they're Ponzi schemes in the sense that there's no way that the yield that they advertise can be had. Okay, they're investing long and illiquid assets like real estate and paying out high yield short term. This is a disaster. This is what happened to the U.S. and people like Bear Stearns in the great financial crisis. Investing long, paying out short. It's insanity. And they invest in real estate prices, debt, everything else. And these wealth management companies are going under. So look, Xi Jinping, this is a desperate guy. Okay, as you can see here, he's now sending the police to visit investors saying, don't take your money out. Don't complain. Don't protest. How does he know? Well, everyone in China, unfortunately, and even people like me who visited China 25 times or 30 times in the past, you're in the books, okay? China uses facial recognition like no other country. So they know who everyone is. It's scary. Okay? Again, command economy. Okay, this is not going to create consumer confidence by sending police to visit you because you decided you want your money back off of a disaster wealth management product. This is a full-scale disaster, folks. There's no confidence. This is really bad for the CCP. This is the end of the CCP, the beginning of the end. It's not going to end tomorrow. These are people that wanted to transform China from a manufacturing base, agricultural manufacturing, to consumer. Well, they failed miserably because now they've destroyed the consumer's confidence and they've destroyed the consumer in a sense. What are they going to do now? The last thing they have is the stock market, right? The Chinese individuals love real estate and they also love stocks and they invest in them. China has a lot of companies public. They have probably more companies public than the US, by the way, in terms of number of companies. And now they're trying to boost the stock market. They're cutting rates in desperation. None of it's going to work. Okay. Now, I have a very negative view on Xi Jinping. It's a complete opposite view of the talking heads. I think he is dead man walking. So you're not going to hear that from anybody else. Okay. Look what here's this chart. He has been in power during the worst Chinese stock market performance in 30 to 40 years. During this time period from 2012, US S&P is up 4x, where China's flat to down. I mean, China local shares are down big. They look like they might be support. They're not support. There's no support levels. And what's even worse for China economically is FDI, foreign direct investment, shrinking. This is really bad. China needs that investment, okay, to generate dollars to do other things and generate economic growth. They're not getting it. Companies are pulling out, okay? Apple, the rest of them, they're pulling out. And the Chinese yuan is collapsing, okay? Which kind of doesn't make sense. It's kind of weird because when you say the Chinese yuan's collapsing, you're assuming it's free. It's a free trading currency like the euro and the US dollar. No, it's controlled. It's a controlled collapse. The CCP wants it to weaken because they might have to go back to their old model in exporting. But they got a problem because Europe's got a big problem. Europe's dead in the water. The US consumer's dead in the water. Okay, so I don't know what China's going to do, but this, again, everything they're trying to do It's terrible. Now look what they've done with autos. Okay, they're trying to export their way out of this. Not going to work. Okay, as I said, but look at auto exports, especially, and these, by the way, are EVs. China's not stupid. Okay, they're not stupid, and you need to read into this. So this is what's really happening. China, okay, over the last 15, 20 years, they have about 180 plus auto companies. That is staggering. Here in the US, what do we have? 10, including some of the small. They have 180 plus, maybe over 200 at all. And the last 10 years, they all started making EV cars. Okay, the last 5 years, let's say, pounding into EV because they knew that everyone is jumping on this EV bandwagon. The EVs aren't selling in China because they're low quality, they have defects, and they're just piling up. So what did the government do? They set up incentives to dump these EVs to the dumb people in the West, Europe, the US, but mainly Europe and Africa, Latin America. These EVs are a disaster, okay? But they have no other choice because you got all these companies that in China that employ thousands of people, and they're all producing these horrific EV cars, and they're taking advantage of the climate change concerns here, and they're just dumping these vehicles, and they're terrible vehicles, by the way, terrible. So this is, people, oh, look at China exporting. No. China's dumping EV vehicles to dumb governments around the world, idiots. Okay, because in 2 years, 90% of these cars are going to be scrapped. They're terrible cars. Okay, have you ever driven a Tesla? Okay, Tesla says when you get in the car, you have 300 miles to the charge. Okay, that's a fallacy. Okay, you might have like 90, 100 miles. A Chinese EV, you barely get 50 miles on a full charge. Okay, that's the reality. Now going back to the economic situation, but here's the biggest risk. So the biggest risk for China is youth unemployment. Youth, look at the size of it. Now, CCP just announced last week they're no longer going to give this data of youth unemployment. Why? Because it's approaching 25%. And for those of you who remember, back in 1989, the youth, the last big social unrest we had, which, by the way, unfortunately, ended in disaster, was at Tiananmen Square. This was students, couldn't find jobs. We're heading towards another Tiananmen Square. Okay, this is the risk. Now, I've spoken about this, and this is why everyone is turning bearish. They have no idea, or at least some of the views I told you, but they're all turning bearish. Now, again, we talked about sentiment in the U.S. and driving whether you should buy or sell. Now, because everyone's bearish, does that mean Chinese stocks are a buy? No. We're close, but not yet at the bottom. But China should be on your radar, especially the tech companies that are independent of the government, like Alibaba to a certain extent, JD. You should be watching these companies because at some point they're going to be flushed. And it's going to be fast. I'm not going to be able to create a video on that day and say, hey, but you should be watching these and looking for the flush because positioning is very bearish. The bottom's not yet in, but we're getting close. Watch the charts. Listen for every Wall Street bank, Goldman Sachs downgrading all these companies. When that happens, it's the bottom, and it's coming soon. Okay, because China cannot get out of this mess. Now, will China get into a long-term Japan-type bear market? Probably. But during that time as a trader, when you get a flush, there's going to be huge rallies, massive rallies to take advantage of. Maybe rallies as much as 80, 90% off the bottom and then back down again. But this is the kind of thing, the volatility we're going to see. So if you're a trader, watch the charts. Okay. If you're an investor, focus on the top quality companies, tech companies primarily, which are the ones public. And also be careful out there.